It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? So pretty much I'm going to just talk about the characteristics of the forex market. I'm just going to show you, what happens during certain times. Now, it happens on most pairs. I'm on pound yen for an example, but it does happen on a lot of pairs. Now, these are custom times. For example, my Asia session is 12 till 6 in the morning, but to a lot of people it may be 1 till 8 or whatever the times are. But pretty much over time and experience, you begin to look at these patterns in the market, and you just you just become you understand it and the way the flow of the market is moving. So this here is my Asian range. This is my London. This is flat time, and this is New York. Okay. So I'll show you many more examples down here, but not always does it happen. But usually, what you will see is the Asian session. Liquidity sweep to the upside, then back down, and then it will either continue bearish, or it will just pull back up and tap into an order block that was left behind from the liquidity sweep. Because throughout the Asia session, this is our logic way of viewing it. It's just accumulating orders, liquidity sweep, so clearing out all these orders, and then back down, clearing out all these orders. So that's a classic manipulation. Then what you can expect is either it'll just retracement back to an order block here, but in this case it retrace back into this wick here, right? And usually if you go to the 1 minute time frame, you will most likely see an order block setting within there. Now it's important to note as well that 8 o'clock is around the time of where the manipulation starts to stop. So as you can see, from 7 in the morning, right, 6 actually, but 7 in the morning from here, you see a London session kicked in, price pushed up, and then around 8 o'clock it stopped and started to reverse. So around those times you could look for potential entry, but I can obviously, just looking at this now, prices seem to be tapping into a supply zone over here. So as obviously these price movements aren't random, they're always tapping into a supply and demand zone or order block, whatever you want to call it, right? And that's what will happen. As you can see, what happened from there, then if I just go back and remove this. So we had the Asian session, liquidity sweep to the side, back down, liquidity sweep to the downside, back up, testing most likely an order block down here, up here. And then during this time, so 10:30 till 11:30, is usually the times I don't trade. However, these are the times I look to exit my positions from the London session, simply because it's like a build up, a range, and then usually you see a reversal, because as we head into New York, between 12 specifically, between 12 and 2ish is when you start to see the reversal. But I've marked up from 10:30 till 11:30, because I get back at the charts, I take a hour break here, and then I get back on the charts 11:30, and then I'm looking for those reversals right until 2 o'clock ish, and then I stop around 2:30. So as you can see, Asian session, liquidity sweep, back and tap into an order block over here, flat price. So we're looking to exit positions if you're like buying up into this here or selling down to here. We're just looking to exit our positions during this time, because we're scalping during London, where we're catching the most momentum. And obviously at New York session, so this is where you can expect the reversal. As you can see, price obviously from here, as the New York session opened, we started to see a decline in price, again tapping into an order block. So this would have been a great trade opportunity, if you caught a lower time frame entry, but that's literally the nature of the market. And as you can see, price came back up, the moves aren't random, it tapped into an order block, and then obviously continued. Now from there, we don't usually trade. Same process again, right? You not always will see the liquidity sweep, but it's important that you understand this. Asian range, London breakout, stayed above to the upside, and then what happened is you've seen this flat price. If we were buying into here, we'd obviously look to close our positions around this time. Then obviously the New York session kicked in. It's sort of just ranging. In this case, we would be expecting probably a bearish move, and then obviously, as you can see, price slowly declined, and then obviously tapped into this order block here before making a new high. Now again, we don't trade these hours. Asian session right here, London, liquidity sweep to the upside. Usually what will happen is it will just liquidity sweep, continue in that direction, then New York will kick in and boom, right? And that's usually what will happen. So Asian session, London, where I like to close my positions. So if we're in sales anywhere here, or buys, whatever, It closed around this time. New York session kicked in, obviously created a new low around 11ish in this case, and then probably would most likely been tapping into a 1 minute order block here, and then price continued bullish, and you know, as you can see, it was previously bearish. New York reversal, bullish. Continue to do this and continue to do this. Again, if I just remove all this, Asian session, liquidity suit to the upside, moved in that desired direction. That price, so let's close off our positions. So if we did sell anywhere within here, or you know, mitigating previous supply zone, let's close around this time. Then we head into New York, and we were probably expecting a bit more bullish movement, but as you can see, it just sort of was quite flat on here. That was around, well, that was a Friday actually, so then obviously around 2:30 we did see quite a big of a drop there. But yeah, that's pretty much it really. Just understand that, you know, what I'm saying is if we have an Asian range, let's say there, and we liquidity side, we can expect a further upside movement, right? And the same rule applies if we see Asian side, we should expect that continuation to the downside, right? So whatever, you know, way it flicks in, we should expect further upside movement. Okay, so if we align it all with the market structure and stuff like that, it will all start to make sense. Because usually what will happen is if you are going and you trust the overall structure of the market, so for example, we are in bearish order flow and you see this happen and price breaks to the upside and we're mitigating a previous order block, we can look to sell from there and look to scale in along the way, and we know that the overall structure of the market is bearish, so it's going to increase that probability. And again, but if the, you know, if it was still bearish order flow, but we've seen Asian range and liquidity to the downside, we can probably not to look to take that trade and on to the next, right? But that's the overall sort of characteristics of the market. There's a finger here in the Discord as well, you can see as well. Actually, it'll be in the files and PDFs in the PNGs section on the course, and times, and try to explain what you can see. But my best trading times as well, if you're probably wondering, are this New York, London session, sorry, and then New York reversals I like to catch as well, because obviously if we look at this here, we've got the Asian range, we got liquidity to the upside, so this indicates that we're looking for those buys. Then obviously, as you can see, price tapped into an order block here, tapped into an order block here, tapped into another order block here, and gave itself multiple entries along the way. So we could buy from here, buy from here, buy from here, buy from here. Then as this around this time kicks in, right, we can look to close our positions because we know there's a potential reversal about to happen. In this case, 10:30 to 11:30 had to, but in this case it broke structure to the downside, and we left off without even entering into New York, right? But obviously, as you can see, the New York session opened, we had this bearish candle, and then tapping into an order block and bullish, right? This here is obviously because we had a previous bearish move. We're looking for that bullish move, so we could have captured this trade and targeted this supply zone here, and that's all just being within the characteristics of the markets, right? Because yeah, that's pretty much it really. And then the same rule applies. Sold from here, got a bought from here as well into this order block, and probably tapping into something here. So there's always a reason for why price reverses from certain. Quick tip as well: if you're trading fundamentals, make sure your supply demand zone lines up the fundamental date release, and it will do you favor. But other than that, guys, I'm going to end the video here, and that's pretty much the characteristics of the markets. So yeah.